Hey guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's August the 26th, where we'll talk about Bitcoin, Solana, MicroStrategy, Tesla, and more of your favorites. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom by looking at the chart. So let's take a look at the charts and see what the tea leaves have to tell us. But first, a special thank you. Special thank you goes out to Rusted Woods 100. Rusted Woods 100 has been one of my longest standing viewers. He's super active all the time, always commenting on posts, and was the first person ever to give me a super thanks. So I'm going to put a super thanks right back to you, Rusty. Thank you so much for doing that, buddy. You're the first person. It always takes one to get the ball rolling. So thank you so much for that, that super thanks about a week ago. And I look forward to continuing to build our relationship together over the next however many years we're on this investing journey together. I know you've really gotten after it. You've had an opportunity to be able to retire very recently and do more of that amazing woodworking that I know you love to do. So super special thanks goes out to Rusty Wood. So with no further ado, let's dig into the charts. All right, as always, we're going to start with the Bitcoin TABI model. On the Bitcoin TABI model chart, you'll note that the short-term holder cost basis is at 108,856. Again, where do I get those numbers from? From James Check on Chain. So short-term holder cost basis is around 108,800. Let's call that $109,000. The true market mean is sitting at 77. We're still orange on the Bitcoin TABI model despite the slight pullback that we've had. That's telling us we still haven't gotten to the super overheated phases yet. Dark orange, light red, dark red. We still have those phases to go. Yellow is kind of a neutral. So we're just a clip above neutral right now. If we take a look at some of the other metrics, things like the Meyer multiple, it's back down near 1 again. The MVRVZ score is back down near 2 again. So nothing is super overheated right now. And again, the historical volatility is at an anemic 37% right now. It's a little better than we were back at the beginning of August when we were below 20. But 37%, that's kind of anemic for something that's typically a much higher volatility asset. On the one day chart, you'll note that we came down and perfectly, you're going to see it a little bit better on the 4-hour chart, that we came down and tagged that short-term holder cost basis. So that did act as support. If you were to go back to my video from last week, which I know one of my viewers did, thank you, JC Cap, he went back and he said, hey, I think you nailed it. You said it could pull back as far as 110 and maybe even as low as 108 down to where the short-term holder cost basis was and fill in that gap. So it's exactly as we expected. Guys, if this was resistance back here at 111 and then right here at 110 and over here at 109 and change, call it 110, somewhere in that 110 to 111 range, if that has been resistance in the past, we're turning it into support by going back and retesting those levels right now. Does that mean we're out of the woods and couldn't go lower? No, we could still go lower, but the likelihood is very slim. There is a ton of volume right here that will suck up any coins the minute it goes below 110. I know the minute it went below 110 yesterday and today, I was a buyer. I was adding to my position. I was adding not just a DCA amount of Bitcoin, but a large amount of Bitcoin at a time because we were just at 124. If I can get it at 109 or 110, that means it's on sale. That's where I believe we should start bottoming. If we go down further, I add even further. You'll note that the liquidity is pretty much consolidating here, right? We made an all-time high on the liquidity back here on July 1st. We then bottomed out on July 31st. So over the course of July, liquidity was shrinking, and now it's starting to go back up again. With the dovish remarks by Jerome Powell last week at Jackson Hole, expect to see the liquidity start to come pouring in. The stage is being set. One of the Fed governors was fired yesterday. The stage is being set for an interest rate reduction in September. The odds, I think, right now are in the 90 to 95% range, which means it's pretty much a done deal. Whether it's a quarter point or half a point remains to be unseen. My guess is a quarter point because they don't want to rock the markets too bad. So anyway, what do we see? We see the support zone still where it was before, call it 108 to 110. And then to the upside, we start finding resistance at 115, and we're going to find resistance all the way up to 120. We then would need to break through the previous all-time high. That's on the daily chart. If we switch over to the 4-hour chart, you'll see we are mean reverted to the downside. RSI was almost below 30. MACD looks like it's starting to turn over and start to go back up. That makes sense that we would find support. Remember, I told you I would show you on here where you could see it clear as mud right there that we wicked down and basically touched the short-term holder cost basis almost to the penny. So, and notice it's starting to level out here. Again, does that mean we are out of the woods? No, we started to level out here and even spiked up before going down again. Could we do that one more time? Anything is possible. Is it likely? Not very when you look at this massive wall of support down here on the VRVP. You'll also note that we were holding the 100-day moving average for a while, which was sitting around 111, 112. We did break below that. The 200-day is all the way down here at a 101 now. 101. That's crazy to think that the 200-day moving average, we just broke 100 not that long ago, and now it's at almost 101, $100,932. So that would be the deepest support, I would say, right now would be down to the 200-day moving average. The likelihood on that is very low, again, in my opinion. SOLBTC, finally, some action there, right? We kept hitting our head against this 0.00175, 00175, like over and over again, and finally wicked up to the upside. We did come right back down again, but what that means is right now Solana is outperforming Bitcoin. Hence the reason this has made a pivot and is starting to angle back upwards, making higher highs and higher lows along the way. That's a regime shift. This is a daily chart. We're looking at months there, not just a couple of days or a couple of hours. This was in a structural decline till here with Bitcoin more dominant than Solana. Now Solana more dominant than Bitcoin. Don't call it a comeback, as they say, right? We do have resistance up here starting at 0.0021, somewhere thereabouts, and that extends all the way to 0.0027. So once we get back up into this range up here, expect this to be a choppy journey with lots of ups and downs along the way as we work our way through that resistance that we see up there. Again, Solana, you can see here, we made the all-time high back in January, right around the time of the inauguration. We went down until the tariff tantrums and have since been structurally in an uptrend with higher highs and higher lows along the way. Would love to see that continue. Do I expect to see it continue? Yes, there's just too many great things coming out with Solana here in the future, in my opinion, here on the daily chart. On the 4-hour chart, you can see there's some resistance up here at starting at about 212, extending up to right around 220. We've tried to tap on this zone 1, 2, 3 times and got rejected all 3 times. Third time's a charm, I guess they say, right? So hopefully after this one, we break through and we start setting some new some new local highs. We are following this pretty strong linear regression channel, and we have dropped back down into the bottom portion of it, supporting on the previous support zone. You'll also notice the point of control at 177, 178 on the VRVP. That's over the last several months. So it's not unusual that every time we break out, where do we pull back to? We pull back to about 177, 178. I did put on a perp trade recently at around 177, 178 and exited it at 204, 205. So I missed the absolute top, but it was a juicy perp trade. Why did I do it? Because I believed we had bottomed. I was using the mean reversion, the fact that I had a green dot over 1 standard deviation to the downside, just like I did a perp trade back here when we had one standard deviation to the downside and we're supporting on the 200-day moving average. If we make our way back down here to the zone of support, let's say, to this point of control and or the 50-day moving average again, and it looks like we're mean reverted significantly to the downside, will I put another one on? Most likely. MicroStrategy on the daily chart. On the daily chart, you see all the squiggly lines with the MVRVZ score, or it's not MVRVZ, the MNAV score. So what's going on there? So Saylor a week ago changed his mind and said, well, maybe we are going to ATM the common stock if it's below an MNAV of 2.5. That sent MicroStrategy into a tailspin. We were starting to make a recovery up until that point. There's last Monday. I made the video on Tuesday and said things were looking good, and then the bottom fell out. Why? Again, people just didn't like the fact that he had changed his mind and maybe ATMing the common stock, thus diluting common shareholders. However, it's an accretive dilution, meaning there are more sats per share, so that down the road, when they are no longer ATMing anything, the common stock, let's say, and Bitcoin takes off, and the MNAV premium returns, now all of a sudden the shares will go ballistic. But again, in the short term, it is painful being a MicroStrategy holder and watching it drop back down to these levels that we hadn't seen since all the way back in April, right? So May, June, July, August, 4 months, and then bang, we're right back down to those levels again. But you'll note this is a very strong area of support. I'll remove the lines I just drew, but you can see I'll circle right here how many times we've interacted with this $340 level. I don't know if you remember, but back in the day when I was first started making TA Tuesdays back at the beginning of the year, I was talking about how that was a point of resistance over and over again until we finally broke out, and I wouldn't be surprised to see us retest it. Well, guess what, guys? We're retesting it right now. It took 4 months, but the retest occurred. So it's all technical analysis. It's all in the tea leaves, right? It's all human nature. Where's the point of control right now? The point of control is up at 380. So we're below it. So the natural direction of progression right now is to make our way back up at least to this 380 zone, which would be a 35-40 point increase from where we are right now. We are mean reverted significantly to the downside. And again, the MNAV premium is absolute merde right now. It's 1.4 on the undiluted, 1.57 on the fully diluted MNAV. So very, very low. Anytime MicroStrategy is below 1.5, for me personally, that's a buying signal for me personally. Okay, so support looks to be exactly where we are right now. Not surprising at 340, 345. We've got to break through the 200-day here at about 355, the 100-day up at about 378, 380, which is also that point of control that we were talking about. And then finally get back up here to the 50-day moving average, which is right around 390. We break through those three levels, we're back up in business again, up over 400 with MicroStrategy. How long until that happens? Who knows, right? Nobody can say for sure. But on the 4-hour chart, we are definitely mean reverted to the downside. We are definitely under 30 for the RSI, or had been under 30 for the RSI exactly 1 week ago, and the crossover occurred on Thursday the 21st. That also led to a buy signal. On the confluence chart, we were at the very bottom of all the confluence clouds, so everything right now is screaming buy signal for MicroStrategy, right? Those of you that said, oh, I missed it, I wished I would have loaded up, and you were saying these things when we were up at 400 and 425 and 450, well, now's your chance. We're down at 340, and we had just been up at 450, 110 points higher a month ago. To think that we won't get back up there, that's slim pickings. That's assuming that Bitcoin doesn't go and get back up to 125,000 again. That's assuming that Bitcoin doesn't break out to new all-time levels. That's assuming that the NAV premium doesn't come back. It might not go back to a 3 or 4 like it has historically, but we get back to an MNAV of 2 to 2.5, and this thing is juicy again, okay? So keep that part in mind, guys. Tesla on the one-day chart, you'll note that we are basically going up against an area of resistance. It's this 350 level, we'll call it, plus or minus 10 points. So from 340 to 360, this zone right here, look how many times we've tagged up against it in recent history, only to reject off of it and come back down again every single time. We're beating our head up against it again right now for the 1, 2, 3, 4, fifth time in just the last 4 months. So seems like on a monthly basis, this is acting as resistance. I've said all along, 360 is super strong resistance, one that we're going to have to work hard to break through. So that's going to take a catalyst. Soon as that catalyst happens, I believe we're off to the races with Tesla. Again, it's not that I don't have faith in it. I just thought it was going to take a little longer than others may have expected. You will note that on the mean reversion, we are flat. On RSI, we are flat. On MACD, we are flat. There is virtually no volatility in this thing right now. It's trading in a super, super tight range. The confluence clouds are starting to squeeze together, aka they work like Bollinger Bands. Whenever we squeeze together, we typically break out to whatever side we're trending towards. Right now, we're trending up. So with these bands squeezing together, expect to see a breakout to the upside. Over what time frame, that is still yet to be determined. Here's our resistance to the upside. Again, 350, which is the 50% fib level, and then that 363, which is a historical, like a long-term support and resistance level. You'll note to the downside, we are supporting pretty much on the point of control for the last several months, which is right around 320. So right now we'll break out and go to the upside up to 350, 360. We'll pull down to the downside, down to the 300 to 320 range with a wick here and there above and below those levels. Those are our current support levels. Buy zone even could be down as low as the 200-day moving average, which is around 330 on Tesla right now. You will note that we are mean reverted to the upside. Our RSI is slightly above 50 right now, and MACD is also positive. So expect to see that perhaps pull back just a little bit and reset this back down to the mean. That would mean pulling back to somewhere between 320 and 330 on Tesla for the support. Again, resistance 360 to the upside. Nvidia on the daily keeps its march moving straight upwards. We did have an opportunity to buy last Wednesday. So right after I made the video, on Tuesday it was starting to tank, and on Wednesday it pulled back to just below 170. Which after it had already been up to almost 185, that's a 15-point decrease. That's significant, right? That's 7-8% pullback. It almost gave us an opportunity on the daily chart to say, hey, this is a good place to buy, right? If we move over to the 4-hour chart, we actually mean reverted finally to the downside. Remember, I kept saying the last time we had done it was March the 24th? Well, fast forward. April the 24th, May, June, July, August. Almost 4 months later to the day, almost to the day, not quite, but almost 4 months later, we finally mean reverted. And it was substantial. It was a minus, if we put a number on it right here, it was a minus 1.3 to the downside. So that's substantial. There's your buying opportunity right there at 170 to 172. Hopefully you capitalized on that if you didn't have enough Nvidia. If you had covered calls out there, it might have allowed you to be able to buy those covered calls back. Because remember, I kept saying we had to keep rolling them and rolling them and rolling them because this thing was just running. It wasn't taking a breather, but it finally did. So support to the downside, I would say, is the 50-day moving average. So around 168 to 170, which is this support zone right here. That would be the immediate support to the downside. Below that would be 145, 150. That was the area that we last really pit stopped at, I would say. Do I expect us to go down to there? No. But is it possible? Yes, anything is possible. Down there, that's a screaming buy zone. Anywhere down by the 200 or the 100-day moving averages. If it pulls back to the 50, that's a good nibble zone. And resistance to the upside is just the previous all-time high, which is around 185 right now, 185. If I move over to the MicroStrategy Tesla chart, you will note that I thought the bottom was in right here when we were close to parity at 1.02, 1.03, 1.04. And indeed, it dropped down to 0.99, right? That's been the low. And we've actually broken below this linear regression channel that we were in before. We were in it very tightly. You'll notice that the Pearson's coefficient has gone down. It was in the 75 to 80 range. Now it's in the 64 range. That just tells you it's less of a linear fit. It also tells me we may have made a regime shift because this high, the second one here, is lower. We made these lows over here, and this low is lower than the previous lows. So have we indeed started to go back the other direction? Perhaps. If we have, what we're looking for is we are looking for this to bottom somewhere, give us clear-cut buy signals where the trend flips. Here it almost flipped, but it didn't quite flip. So I was saying I had front ran it and moved some Tesla into MicroStrategy. What I want people to realize is all hope is not lost. If you moved it into MicroStrategy, it meant that Tesla was outperforming it. Had you gone from MicroStrategy into Tesla up here and Tesla into MicroStrategy back down here, you're gaining every time you're doing this. So just keep that part in mind. If you made a swap, even as high as up in this range here, 1.06, 1.05, then once MicroStrategy takes off again and we make our way up to, let's say, the 1.15 to 1.25 range, which we inevitably will, then go ahead and swap back from MicroStrategy back into Tesla. That's the thing. You're in two high-quality assets. You're pair trading them back and forth in an attempt to grow both bags at the same time. If you're only looking to grow one bag, I know a lot of you compare your performance to Invest Answers. He's only going one direction right now, and that is MicroStrategy to Tesla. He's not pair trading Tesla back to MicroStrategy at all because his MicroStrategy bag was like 3 times larger than his Tesla bag. Well, now they're equal. Now he's gotten them to parity, which was his immediate want. His second one is to get his Tesla bag to 50% because for him, that's the one that he wants to be the most in for the long term. He used MicroStrategy from 2020 until 2024, which was when he really started to do this MicroStrategy to Tesla swap. If you are predominantly MicroStrategy, it would make sense for you to follow his lead. If you're 50-50 MicroStrategy and Tesla, it would make sense for you to keep doing the swap back and forth from MicroStrategy to Tesla, Tesla to MicroStrategy, because you're already at relative parity with the two. If you've been super heavy Tesla all along, well, guess what? Now's your chance to go ahead and add a little bit of MicroStrategy if you would like to add MicroStrategy because you're getting the perfect signals to go from Tesla to MicroStrategy. So I hope that makes sense. Everybody's needs are different. You cannot compare what your needs are to Invest Answers needs, number one. And number two, you can't say, well, gosh, it was a mistake to make a swap and go from Tesla to MicroStrategy here if you had done the opposite up there because you came out ahead. You won. The only time you don't win would be as if you swapped from Tesla to MicroStrategy here and then panicked and went from MicroStrategy back into Tesla down here. That's going to be a theoretical loss because you made the swaps opposite of the way you should have been making them. Okay, I hope that part makes sense. Last week I threw in a bonus of MicroStrategy IBIT. I talked about using the cloud, which is over here on the right-hand side, the Arb cloud, which you see over here. And you can just barely see the Arb cloud price and all that. We were below the bottom of the cloud or out the bottom of the cloud, which is typically a move from Bitcoin into MicroStrategy or IBIT or FBTC, whatever the flavor of your choice is of an ETF. We made our way back into the middle of the cloud, or not quite the middle, but into the lower 1/3 of the cloud. We're still in that lower part of the cloud right now. Notice we are not anywhere out the bottom. So right now, you should have already made the swap like I did here, IBIT into MicroStrategy. I did it a little bit too soon. Right now, I'm right back up to parity, so I haven't lost anything as of this point. If it continues doing what I think, which on a buy signal, you go from IBIT into MicroStrategy. If I believe it's going to continue doing what it did before, and we make our way back up to the 6.1 and maybe start to see sell signal signs, maybe beat our head up against this 200-day moving average, maybe go out the top of the cloud on this side. If that happens, then I'll go from MicroStrategy right back into IBIT, and I'll come out ahead. How much ahead? Well, it all depends on how big of a move that is. Let's say it's from this white line up to this 6.12 level. That would be an increase of 11%. That's 11% more IBIT that I'm going to walk away with, again, in a tax-free account where I'm doing this in an IRA, walk away with 11% more IBIT. Had to think about which way I went from which one to which one, but walk away with 11% more IBIT without coming to the table with any more money. Literally just playing the MNAV of MicroStrategy. That's what it boils down to, is playing the MNAV or the premium. When it's up above the Arb cloud, or it's up here, MicroStrategy is selling at a premium to the Bitcoin that it holds. When it's down here or below the cloud, MicroStrategy is selling at a discount to the amount of Bitcoin it holds relative to its historical stock performance, let's say. It is all relative. Finally, the S's, right? The ones that some people don't get out of bed for 9 or 10% returns. Others I know are completely happy making 3 and 4% returns in savings accounts and treasuries, and they're getting slaughtered. So if you're like me and you want to not hold your cash in a place where it's only earning 3 or 4%, but instead hold it somewhere where you can earn 9 or 10%, these are the answer right here. And that's the S's, as I call them, the MicroStrategy preferreds. STRK is now trading at a discount to par value. It's actually gone back down to 95. That is the market saying they don't believe that the conversion premium is worth it. What do I mean by that? That 10 STRK shares can be converted into 1 MicroStrategy share. Well, where does that make sense? At a conversion premium or price of $1,000 or more on MicroStrategy. Well, newsflash, we might not hit that this cycle. So STRK holders are going, you know what? It was a fun ride. We bought it in the 95 to 100 range. We sold it when it hit the highs of 132, almost 33 back here. Got held it through the ex-div date, which was, I think, the 14th or 15th of July. And then, bang, you see this huge sell-off. What is the sell-off? The sell-off is as they paid out those dividends, people didn't reinvest them. They just took all their shares, sold them out, and moved them into something else. Maybe those folks did what I did and moved it into STRC. Same thing with STRF. It started out, you were able to buy it below par value. It raced up to a high of 128, sold off after they announced the dividend. Those dividends got reinvested. It caused the price to spike back up again, right up to about 121, 122. And then it sold off, and right now it seems to be leveling at 110, 111 range. We could say that's at a 10 to 11% premium to par value, right? If you're buying the stock for $100 and that's considered par value, and you're earning a 10% yield on $100, then on $111.10, it's no longer a 10% yield. It's now a 10 divided by 111. It's a 9% yield. So STRF's effective yield right now is 9%, and so is STRCs. It's not surprising that they're equal. This one pays out the dividends quarterly, STRC monthly. And STRC right now is still at a discount to the par value. It almost made it to par value, and then the dividend was announced. And the dividend was announced as an 80-cent dividend. It should have been 75 cents. The reason it was 80 was because it still wasn't at 100. STRC was only up to 98. When it goes to 100, it will pay out 75 cents on the share every month. Right now, because we're down in this 95 range, expect to see the price go up by the 31st of August. On the 31st and 1st of September, expect to see the price go up. Why? Everybody's going to get their dividend checks. Many of them, like me, have their dividends set to reinvest. All that reinvestment buys up the available float and drives the price back up again. So I wouldn't be surprised to see the price back up in the $96 to $98 range again very soon. How could you play that right now? If you don't have any STRC, buy STRC at 95. Not financial advice, just giving you an idea. Buy STRC at 95. It goes back up to 98. You've already made 3% roughly on your money. And you're set up to earn a somewhere in the neighborhood of 75 to 80 cents a share dividend, which is another, on an annual basis, is another 9 to 10% yield. And here your fixed income products are actually not only keeping your cash at a steady value, they're growing it while you're waiting to see what to deploy it into next, okay? So that just kind of gives you an idea of how to use these things, how I'm using them, what the differences are amongst them and everything else. So I hope that part helped. We're going to go ahead and jump into the next phase. All right, I hope you found value in today's video, guys. If you did, make sure you smash that like button. Make sure you like this video, subscribe to the channel so that you see more videos like this. Drop me a comment below. Guys, I read every single comment that you guys put out. Like I said, Rusted Woods, thank you for your consistency, as well as the other dozen or so people that I mentioned last week. I read every single comment. I take them to heart. It helps me to develop the next video. If there's things you didn't like about this video, drop that in the comments too. I have skin that's thicker than wet toilet paper, as my buddy Colt said back in the day. And finally, remember, you can book a course with me. I teach TradingView and technical analysis, where I go over everything to make you a TradingView ninja. I also teach a course called Understanding Options, where I teach you from soup to nuts how to go in and all the terminology, all the Greeks, buy and sell calls, buy and sell puts, put them together for more complex option strategies. And finally, if you want to take it to the next level, book a one-on-one with me where we will incorporate all this into a strategy, a plan for you so that you can help increase your financial literacy. Guys, I am G Dinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.